There we go. Finally, the software is working. Another delay after yesterday's problems, too. Maybe I need to upgrade the software. If not, YouTube and Google might be trying to shut down the live stream software. What else is new? Anyways, talking about repo. I wish we wouldn't have to talk about repo, but apparently we're going to have to talk about repo again. Probably why the stock market's doing well today, in spite of all the crazy news coming out of China with the coronavirus and Wuhan, with the oil market. The gold market was smashed. And today we got news that the term repo, and remember, the term repo is, according to Danielle DiMartino Booth, what is actually put on the Fed's official balance sheet. So these 14-day term repos, these 15-day term repos, these 30-day term repos, I think there was a 42-day term repo. It's tough to keep track of all of them. The New York Fed does list them. These are supposed to officially be on the Fed's balance sheet. Now, some of them do roll off, but a lot of them are rolled over. Not all of them are rolling off, because if all of them rolled off, what we would have at this point would be only the $60 billion per month from the Fed in not QE of the Fed buying U.S. Treasuries. And if you look at the Fed's official balance sheet, it is up a lot since the end of August 2019. Now, in the last 3 weeks or so, the Fed's official balance sheet, despite the continuation of repo, has not really done very much. It's gone up and down in basically a $20 or $30 billion trading range. But I wanted to talk about the composition of the balance sheet, and the Fed has been dumping for a while now quite a lot of mortgage-backed securities. They've been dumping them pretty quickly recently, and the amount of increase in U.S. Treasury securities has exploded by, let's see here, I think it's over $300 billion. So since the end of August, let's see, pull this up. It's the end of September, it's up $300 billion. So the amount of Treasury securities, the Fed's official balance sheet, has increased by, it's gone from 2.107 and then change trillion at the end of September 25th, 2019. So 2.107 trillion. And now, as of the end of January, it is 2.409 trillion. So the Fed has been adding a lot of Treasury securities, a lot more than the $60 billion per month not QE. Now, that doesn't mean the Fed is doing extra QE. What that means is also balance sheet composition. So they're swapping one asset for another. They're selling one asset, and I'm using air quotes, for another. Lynn Alden has talked about this extensively. If you follow her on Twitter, maybe I'll have her on for a podcast interview. She had a really good interview on the Jelly Donut podcast in the last couple months. So the Fed is dumping mortgage-backed securities and buying more treasuries with them. That makes a lot of sense because of the massive budget deficits that the Trump government, with the Trump tax cuts, is running, because there was no coordinating federal government spending cuts. So he did give everyone a tax cut, and tax cuts are good for the middle class there that was making between $65,000 and $150,000. They benefited from the tax cuts, along with corporations and small business. Anyone who wasn't in that demographic didn't benefit from the tax cuts, but there was no corresponding federal government budget cuts, and that's the major issue and why the government budget deficits are exploding. The projected government budget deficits for the foreseeable future are between 1.2 trillion per year. These are official numbers. Unofficially, it's a lot more. 1.2 trillion and 1.4 trillion. So let me get into the repo article a little bit. As you can see there on your screen, the amount of the red line that's following the spikes is the amount of oversubscription. So these are the investment banks and whoever else is allowed to go into repo there. Primary dealers, large money center banks, maybe hedge funds, we don't exactly know who. Maybe it's foreign banks, we don't know. And go in there, even though foreign banks are not supposed to, but with the problems in China and with the oil market down, maybe some of these banks have bad oil loans on the books and they're in trouble. So the oversubscription for today's term repo, and oversubscription means there was more demand for term repo today, for more emergency liquidity term repo, than there has been in a while. So if you could see there on your chart, the big spikes, the last big spikes were at the end of November, I think November 25th, and then the end of September, around when the repo crisis started, about a week after the repo crisis started, repo madness started. It's not parabolic because we're not doing the massive amounts of repo that there was at the end of December, so it's calmed down a little bit. But today, for some reason today, there was an oversubscription, an increase in demand for term repos. And the reason banks and investment banks, money center banks, primary dealers want term repos is because they have control over the borrowed money for longer periods of time. George Gammon, who I highly recommend his YouTube channel, he's done a really good job explaining the US part of the repo crisis. The international part, I'd like to see some videos out from him. I've tried explaining it to him that there's a lot more to the repo problems than just the large US banks, the money center banks, and the primary dealers. There's also the hedge funds that borrowed from repo and then leveraged up the money 10x or more, probably betting on US Treasuries. We've also had a big move down in Treasury yields recently, and that could have caught some hedge funds off guard. The 10-year US Treasury since January 8th, I think the yield is down a lot. The 10-year US Treasury was, let me just pull up the chart here rather than guessing. Pull up the last 6 months. Okay, so on January 9th, 2020, it was at 1.888%, and it got as low as 1.52, looks like. $1.52 on January 31st, and then hit right around 1.52 again, a little bit above that on February 3rd. So those are big moves in the Treasury market for yields. Normally yields don't move that much in the past, but now they are, and a lot of that has to do with leverage. There are these hedge fund managers that are using ungodly amounts of leverage to try to boost short-term returns, to try to make extra money trading these treasuries. And some of these hedge funds or investment banks are leveraging up these treasury trades 10x, maybe even 15x, which means that with that type of leverage, they can blow up very quickly if the trade goes against them. So what we should monitor now with the repo crisis is if there is more term repos, if you're checking these things, because I know people check the New York Fed website and they look, but if there is more term repos that are being added, then those term repos should hit the official balance sheet of the Federal Reserve soon. And if they're not hitting the official balance sheet of the Federal Reserve, then that means that the Fed is lying even more than normal. So the whoever borrowed in the term repo, could have been the oil market, could have been the move again in the 10-year treasuries. I think initially a lot of that move in the repo market from September, on September 16th, late night, and September 17th, I think it had to do with the big spike in yields in the treasuries. A lot of hedge funds being caught off guard with too much leverage. There's a bunch of articles that have been coming out in the mainstream business publications of hedge fund managers talking about how they can't boost their returns, and they've been using a lot of leverage trading treasuries. That's been around, articles about a lot of those for the last couple months. The market is bananas, Anthony says. Anthony, the U.S. markets are floating on an ocean of liquidity. Meanwhile, the information I'm getting out of China is that things are just getting worse. My buddy Jeffrey Landsberg of Commodore Research, he's sending out a lot of good emails. I think you can get on his email list, and I think he has a subscription service. I think it might be to hedge funds. I'm not sure how much he charges, but I think he has a free email newsletter, Commodore Research. He's been emailing all these updates, and he's been tracking the numbers in Chinese. And he was showing me some riot videos. There's like a bunch of riot videos now too. So not only are those videos that are going around of all those dead bodies and body bags in Chinese hospitals, and that's crazy. I've seen like 2 or 3 of those videos today going around Twitter. But there's people rioting too. All the retail investors have gone into Tesla. There was, over 4,000 people bought Tesla Motors shares today. There was a TikTok video of some girl in her college class, and she was day trading Tesla stock, and she said she made $1,500 in an hour or two, day trading Tesla Motors stock. Jack asks, what is going to happen? He cussed here. WTF is going to happen with China? We don't know, man. So we know the amount of infected is way worse than the official numbers. Way worse. And I was told yesterday by my source in Wuhan, who's lived there for years. I've known him over a year now. And he's been accurate with a lot of the information that he's given me about gold price premiums in the past. And also, he talked about the African swine flu a couple months before that became public. He was actually emailing me prices very frequently for the pork prices, how much they were going up at the market. He was tracking these. So he's good at this. And what he heard yesterday, and he has a lot of contacts in the local Wuhan government, supposedly. He's very well respected there, let's just say. I can't give you any more details. I don't want to get him in trouble. It's dangerous. They're arresting people like crazy. Anyone who posts any truth in China, Chinese social media with videos, is getting a knock on their door, getting arrested. They're arresting doctors. Doctors are getting infected. It's a mess. Just look up Commodore Research. So that's, let me get the spelling here. Commodore Research. He's sending out a lot of email blasts. He's keeping very close track of this. Anyway, my source in Wuhan, he's trapped there. And for a while, the Wuhan government did not, and the Chinese government, Beijing, because now they're all coordinating, did not allow food trucks, no delivery of food into the city. So people were going to starve. There was problems. And then they reversed that policy. And now, thankfully, they're allowing food trucks into the city, so there's food delivery. But people were running for a while, dangerously low on food. It's a mess. Look, it doesn't even matter how the coronavirus started, really. It matters, what's more important in my opinion, is how stupidly all levels of the Chinese government, the local Wuhan government officials, the provincial government officials in Hubei, and the Beijing Chinese Communist Party have mishandled this for over a month, allowing the amount of infected to just increase exponentially, many, many thousands. There was a cover-up for over a month, allowing the amount of people infected, and this virus is way more infectious. Check out Chris Martinson's videos. He has a lot of good short videos. He has a PhD in virology than the common flu. Dave, all governments are dumb. But there's tons of people, there's all these China trolls and people in the comment section telling me still how much better China is and how they're going to collapse the dollar and how they're playing the long game and Sun Tzu and Art of War and all this other nonsense. Okay, China has some real problems on their hands. I mean, their economy is basically stopped. Okay, their economy is stopped. I heard a story from a friend this morning. He sent me some messages, and he knows manufacturers in Vietnam. And for the first time ever, this is what he told me, that the manufacturers in Vietnam did not get their part shipments from China, their supplies. So there is, and this was not in the part shipments, the supply shipments were not from Wuhan. So the Chinese economy has ground to a halt. All governments are dumb. I don't trust any government at this point. If anyone defends the Chinese government at this point, you're pretty brainwashed. Finance Freak asks, how did the Chinese keep doctors and nurses working with the infectious rate and little supplies? They're risking their lives. They're risking their lives. The infections, from what I've heard, from stories and speaking with other people, the infection is actually, the virus is, people infected is actually, the virus is spreading faster in the hospitals. And doctors, there are stories from the South China Morning Post in the last couple weeks that doctors are getting, the amount of doctors getting infected with the virus is increasing rapidly. There was a doctor that the Chinese government, I think, just arrested. He was posting a video about the body bags from his hospital because he didn't want to be part of the cover-up. And he's in trouble and he's dying from the virus. Pete Vujicic. I think what probably happened is the DNC just flipped him. I think Bernie won, and I think they screwed him again. I think Bernie probably did win, and I think that Vujicic guy might have been second, and they just changed the votes to make sure Bernie didn't win. Yet there's a lot of supply chain disruptions coming from China. Chinese oil demand's down a lot. I'll do another show on the oil market. We'll save that for another show. Okay, I'll take a look at listener questions and comments. We'll have to see if these term repo, the trends, if there's more term repo borrowed in the coming days and weeks. But what I would watch out for is to see if those term repos that are spiking again, if those term repos with the oversubscriptions are starting to hit the Fed's official balance sheet. Because if we see the term repos increasing again and the Fed's official balance sheet is not increasing, that's going to be big, big red flags. Because the Fed is definitely wary. They're well aware that their balance sheet, official balance sheet, we know their real balance sheet's way larger than this. That their official balance sheet, which I also track, but I don't really believe, that their official balance sheet is much larger than it was in August and September of 2019 prior to Repo Madness. And since Repo Madness started, they told us repo was only temporary, that it would not add to the balance sheet and a bunch of other lies. And then Danielle DiMartino Booth said that the term repos would be added to the balance sheet, and that's exploded the balance sheet a lot more than the not QE programs. But the Fed is now very cognizant that people are watching their balance sheet, and I think we could see the Fed really just stop putting the truth on their balance sheet. We'll see. That's a working theory of mine. We'll see if that happens. So we could see repo continue for months. We could see lots more repo, and that the Fed's official balance sheet might not reflect any of this. Because if the Fed's doing $60 billion per month and not QE, the Fed's official balance sheet needs to go up $60 billion per month in the next week or two. Because for the last 3 weeks, it hasn't risen very much. So the Fed's supposedly buying $60 billion per month in treasuries. RR says, oversubscribed repo and stocks went up today. Yep, I think there's a correlation. Or maybe it's a hedge fund on the wrong side of the 10-year U.S. Treasury trade or on the wrong side of the oil trade. The other thing is we don't know, and I'll wrap the show up with this, we don't know if there's, we may never know this, if there's any foreign banks that are being allowed to go into repo. At some point, Chinese banks may have figured out a way to circumvent all the rules that are supposedly in place, preventing foreign banks from accessing the repo market. So we didn't even know that I didn't even know this existed, and I pay a lot of attention to this. I didn't even know that there was a foreign central bank reverse repo pool until the end of December. And there was $300 billion there, and it was earning a lot of interest, way more interest than American savers, American people with pension funds here in the U.S. were getting. And so foreign central banks were earning all this interest, and they were draining the banking system of reserves with that foreign reverse repo pool. So the amount of reserves in the system went down a lot, and now I think it's up. The amount of reserves it dropped down from like 2.6 trillion in reserves down to 1.3 trillion, so it got cut in half. And then you have JP Morgan and all these other banks that loaded up on treasuries, and they're making more money. These banks now are making more money trading fixed income assets as hedge funds than they are making loans. JP Morgan had record profits recently, and that was from fixed asset trading, not loans. Our oil and copper reflect the reality of the Chinese economy and the coronavirus, in my opinion. But yeah, these foreign banks, these European banks that maybe have bad counterparties in China, or these Chinese banks, they may have figured out a way to get into repo too. We don't know. They don't want us knowing this stuff. We weren't supposed to know in 2008 about the currency swaps. The Fed was fighting that one-time partial audit of the Fed. We weren't supposed to know about the central bank currency swaps. Short squeeze. Yamui Mata asked, what's up with Tesla going to the moon? A lot of it is a short squeeze. So they surprised with earnings. They had an earnings beat, which is, I don't want to go into all the details of the earnings. There's a lot of stuff on Twitter that you could look at. Anyway, a lot of people were still short Tesla, and they got caught off guard, and I think a big hedge fund blew up that was way short Tesla, and they covered all their shorts. And when you cover your shorts, that increases buying pressure in the stock, and that goes up. And then you have all the people that are hopping on. You have college kids with the Robinhood app. You have college kids in class day trading Tesla stock and making money. I didn't say people are buying Tesla electric vehicles. I said people are buying the stock. The amount of people, there was 4,000 people, over 4,000 I think people on the Robinhood app who bought Tesla Motor shares, and some of them don't even know what a stock is. There's some funny things going around finance Twitter. Mark asks a good question. Do I think the hedge fund that got liquidated in Tesla is the one borrowing in the repo market? We have no idea. Normally, those big hedge funds are playing larger markets than just Tesla. It could be related to Tesla, but normally it's a larger market. Like they had an oil trade set up. Like maybe they were listening to everything that Keith McCullough of Hedge and Hedge was saying, that oil is going to have a big rally. And for 2 or 3 weeks, maybe oil had a big rally, and maybe you made 10% on your oil trade, and then oil you got absolutely killed. The losses are mounting for the oil companies. So being long oil paid off as a short-term trade for maybe 2 or 3 weeks, maybe a month. I think it's more likely with repo that it's related to a big move in the 10-year Treasury yields, because you can look this up with hedge funds using leverage to trade treasuries. This was, by the way, this was not common up until the last 10 years. In the past, a lot of hedge funds did not, big or small hedge funds, did not use massive amounts of leverage, did not use 10x or more leverage to trade treasuries. And that is a relatively new occurrence of a lot of hedge fund managers using massive amounts of leverage to trade treasuries. And where do they go to borrow before they put that leverage on? They go to the repo market. The problem is these custodians, these investment banks like Bank of New York Mellon, JP Morgan, some of the others that were running the private repo market, not the part of the repo market the Fed is essentially nationalizing. But there's a large amount of repo market from Bank of New York Mellon, and it seems that they weren't researching the, let's say, the leverage ratios of these hedge funds. So these hedge funds were willing to pay an interest rate to the money market funds that loaned into repo. And Bank of New York Mellon said, okay, we're going to get a commission putting the savings of these money market funds with the hedge funds to borrow. And they weren't checking the hedge funds to see if the hedge funds were over leveraged and bad counterparties. So I think that's a big piece of the puzzle. I think there was a lot of large hedge funds, at least a couple large hedge funds, more than one, that had a drastically over leveraged balance sheet, borrowed in repo, and the market maker for the tri-party private repo market, like Bank of New York Mellon, just thought, oh, we're going to earn some commissions, did not check the counterparty there to see if they could pay back the loan and their leverage ratios. I don't want to answer oil questions right now. I just want to wrap up the show. I'll do an oil show and then hopefully this week, because there's a lot to talk about in the oil market. It was funny. I was getting all these emails about Hedge. Hedge's right. Hedge's going to make me so much money long oil. Why do you disagree with Hedge? I did all these podcasts and short videos about the problems in the oil market. People are telling me, oh, he's a big shot hedge fund manager. He has a bigger YouTube channel. He has a successful small business. You don't know what you're talking about. I was like, look at the debt levels. Why are they increasing production? Why are they increasing production when the oil price was falling? Okay, you did not have to be a genius to see the problems in the oil market. Okay, so hopefully, I like Keith McCullough and Hedge. I think they do a good job. So hopefully, it seems they may have just screwed up this trade, because a lot of hedge fund managers screw up and then sweep the poop under the rug. Most hedge fund managers are overrated. They're nowhere near as good as they claim. Anyway, hopefully he made a lot of money trading that short-term trade with what the oil service companies and the oil service ETFs and like what Schlumberger or Schlumberger, however you pronounce it. Oil industry pain is not over. The shale oil producers that have too much debt on the balance sheet and were unhedged, they're not going to cut back oil production. And if this coronavirus gets worse in China, demand for oil could continue to be bad or get even worse. Yeah, I have no idea how much portfolio percentage Keith McCullough recommended for the oil trade, for the oil services trade. And I don't know if he closed out the position, but I was getting emails from people like, how could you be so wrong? And oil's going to rally and you don't know what you're talking about. Keith McCullough knows the oil market. And I was just like, look at all the bankruptcies. Oil production was still increasing, even though the oil price was falling for shale oil producers. I was like, this is not smart. And the shale oil companies are going to do it anyway. Barring a miracle intervention by the Federal Reserve or some other type of intervention or a miracle oil buyer, maybe the Chinese government makes the largest strategic petroleum reserve purchase in world history for the next 6 months. I don't know. But barring some type of miracle, the shale oil and shale gas, the Chinese even canceled LNG contracts that were high paying for the U.S. LNG exporters. That's what Danielle DiMartino Booth was talking about on her Twitter yesterday. There's going to be a big bust in shale oil in the next 2 or 3 years. I mean, we're already having increasing bankruptcies now. There's been an increase in bankruptcies already for 2020. There's going to be a very, very big bust. The earnings numbers out for Royal Dutch Shell were not good. ConocoPhillips did not beat. They had problems. Although I think according to Robert Rapier, who's my mentor in the oil market. I worked with him for a while. ConocoPhillips is still generating consistent free cash flow and good margins, but I think they had to do some write-downs. Anyways, thank you for listening to tonight's stream. Thank you very much to my Patreon account contributors. I will think of what content to do. I did research my Super Bowl related one, and it's looking like this company is going to be a little bit more speculative than I thought, but they are growing revenues really rapidly, and they are going to do an IPO, looks like, in the next 6 months. They do have a lot of potential. It looks like it's going to be very speculative because it's not a profitable company yet. The SEC filings, I didn't know they were out yet. They just came out in the last month or so. So I was taking a look at those earlier today. I'm not sure if I should put that as a bonus for my Patreon account contributors because it is going to be very speculative. It is an interesting company. They do have a lot of market share. So I'll think about that. If not, I have an idea for another audio podcast beyond the Patreon account paywall. It could be related to the gold miners, especially now with the oil prices down, and well, gold got smashed today, but gold is still up a lot. So with oil prices down this much, the gold miners are still, unless gold gets smashed again, back down to low 1500s or below 1500s, the gold miners are still going to be minting money. Because oil has gone down more than gold. And when oil goes down a lot and gold doesn't go down that much, or gold goes up, the margins for gold miners explode. So we'll see if this trend continues. Maybe I'll do something like that for Patreon account contributors. I'll think about it. Okay, everyone. Bye for now.